Hey there, thank you so much for stopping by Hart Systems Bookkeeping. I really appreciate it, and I want to give you some value right up front, okay? I want to really emphasize how important, crucial it is for you to be looking at your balance sheet along with your P&L every time and making sure those balances are right and actually useful, because if something is entered and it lands on one of the reports and it shouldn't, that means both reports are wrong. Okay. I'm going to go into an example here to illustrate this and to show you how it can be so well used for you to make the best decisions you can for your business, what you want to get out of it, and then ultimately how that gets back to benefiting you on the individual side. Okay, so check it out. Here is a scenario that I want to go through, and I'm going to talk about a couple different professionals that you work with. And then I'm going to throw myself in there as the third one. We got right here, this is an income statement, or the P&L, which is of course going to show your revenue and your expenses, and finally your profit. Right down here, net income is the bottom line of the income statement. So introduce the tax professional. Now, disclosure, I am not a tax professional. This is not legal advice. This is just a high-level example to illustrate the scenario that you very well might be facing with the advice from a tax professional. Their job is to save you money on your tax bill, at least a primary job, and a common tactic they use is to reduce your net income by spending a bunch of money this year so that your tax bill is less. We're going to look at that scenario. All right, so as it is, you made $101,000 in profit this year. That's fantastic. Now your reward for doing such a great job in your business is a $28,000 tax bill you can see right down here. Oi, right? So let's go ahead and spend a bunch of money before the year's up so that our tax bill is lower. Let's spend $40,000, which gives us this scenario. And a tax bill of only $13,000. And hey, look at that. That's almost $15,000 in savings. Awesome. All right, so that's part of the story. Let's bring up the balance sheet to see the rest of the story, or at least a bigger picture of it. We're going to talk about the banker in this scenario too. Alrighty, so now let's look at the balance sheet, and before we get into the long version of the full balance sheet, let's look at a simple example, okay? A home mortgage is a good example of a balance sheet. We've got our assets, liabilities, and equity. Alright, so the value of the home that you pay for it is the asset. Let's say in this case $100,000. You've got your down payment, in this case $20,000, and you've got your liabilities, that's the mortgage, the debt, of $80,000. All right, we're looking at the debt to equity ratio in this case. Your banker is going to look at many things to determine your financing, but the debt to equity ratio is among the most important. That comes from total liabilities divided by total equity. In this case, we've got $80,000 divided by $20,000 to give you 4. That's really pretty high though. On the business side, the upper limit is lower, like in the 2s, 2.5, somewhere in there. So with that said, let's jump over to the balance sheet and go on from there. All right, so here we have the same major sections. You've got your total assets and your total liabilities and your total equity. Now, before I go any further, it is extremely important to know that net income flows right into equity, right? Here it is, right there. That's the same line as the profit on the income statement. It's the same bottom line, right? So changes to that changes your equity. Alrighty, so your banking professional, whose job is to get you the best financing they can, the most appropriate financing, the best terms, all of that. Whether you're looking at a revolving line of credit or a big loan to get a bunch of new inventory, or to expand, or to buy a new piece of equipment, all to generate more revenue and profits, that's who you're going to work with to get you this. And like I said, they're going to look at many things, but the debt to equity ratio is one of the most important. So let's look at this example. We've got total liabilities of $228,000 and total equity of $127,000. And that gives us a 1.79. Hey, that's pretty low, especially compared to that 4 we saw up there above. And by the way, let's read this as this. For every $1 you have worked hard and kept in your business in the form of equity, you have allowed the bank to put in $1.79, in this example right here. Alrighty, so let's look at the scenario if you took the tax accountant's advice. If you spent $40,000 more dollars, that means $40,000 less in your net profit, which directly relates to your equity, overall equity. So we can see the change from here to here is that same $40,000, and that gives us, it makes the debt to equity ratio jump way up to 2.61. That's kind of outside that limit I had mentioned earlier. And so the banker in this case might say, oh boy, I don't think we can get you this financing that you're needing to make this next step in your business, which would suck. If you're making decisions off that first example and then this hits you, that really sucks. It all comes down to you. What do you want? What do you need out of your business? What are your goals and your dreams? And really, it comes down to what do you want in your personal life? Okay, I assume you made your business to create the life that you wanted. And your life is so much more than your business. It goes back to you personally, your family, and all of this. So that's where this simple example, this scenario, really illustrates that. Looking at your tax professional's advice, looking at your banker's advice is probably good advice, and it could be right. I'm thinking they're not right at the same time though. So again, depending on what you need and when, that's whose advice to listen to. Let me introduce myself as a third professional that could be working with you, who would work with you all year round, who would get to know you and your goals and your dreams. Very intimate with your books and your finances and what the business is telling you. And how to steer some of these, looking at the present and looking into the future a little bit too, to ultimately get you what you want. So that's my proposal, that you would consider me to work with. If not me, okay, if not me, find someone good. Find someone who understands the value and the benefits from the balance sheet and insists that it's not only right, but it's being used, that you are reviewing it on a regular basis to make these crucial decisions that are vastly important to you and the business to sustain. All right, so I appreciate you watching. If you have any questions, please let me know. There is a button right below this video for you to have a free download. It's basically this topic expanded. It's some more tips and tricks and overview of the balance sheet. I encourage you to do so and take it and use it. And again, if you have any questions about this or that free download, please let me know. Do not hesitate to reach out. I want your success. All right, thank you so much. Have a wonderful day. Bye-bye.